beauty of this decentralized system, right? It resists the ability to be controlled by any centralized authority.
Correct, yeah. So even if they've got the Chivo wallet, which has some elements of control, it'll be possible for El Salvadorians just to download another Bitcoin wallet and use that one instead. And the government can't really stop them doing that if they're going to have this thing working on the Bitcoin network, which is how it's been designed. So but to take the positive spin on it, if Bukele's intentions are true and it is a genuine attempt to get his country out of poverty and into the 21st century, I would probably use the analogy of it's like when India didn't bother building the poles and wires for the internet. They just moved straight to 5G, because what was the point in using that old technology when you can go straight to the future technology? And when they started that process in India, for example, there was question marks about how good 5G would be and, will it be better? But the point is you're moving on to the next technology and leveraging the exponential benefits of that. So on a positive spin, I think Bukele's thinking, well, we build on the Bitcoin network, and therefore we piggyback all the innovations coming from these huge amounts of money in the Western venture capital world and investment world coming into cryptocurrencies. We can just piggyback on that and build, stock markets of the future, capital markets of the future, money systems and banking systems of the future. And we don't even need to build the infrastructure. We're just going to tap into it. So on a positive spin, I think it's probably a bit of both. But I think that's the way it will go, because that's the way the industry is going. So
absolutely. I think, it'll certainly be interesting to see in the next, say, 6 to 12 months, the effect on just the income flows going into the country and whether that has a sizable impact on GDP, per capita wealth, that sort of stuff. I was going to ask you, what do you think this means for next steps? Has there been talk about, like, for example, how far away would it be for a country like, say, Argentina, which is, many times larger, but in a similar situation where its peso is, chronically devalued and debased? Effectively, they use the US dollar as the currency of choice there. Is there any sort of signs or discussion about a country that large potentially tapping into the Bitcoin network to get around its issues?
I don't think right now, to be honest with you. My sources in Argentina say that despite the economic problems they're having there, the appetite for doing something as radical as that isn't there in the country. A lot of people try to get their money into US dollars.
Yep.
They describe the El Salvadorian president, I think, as a rare bird, which I said in the note probably means loose cannon. But
yeah, okay.
But in saying that, what I do think is happening is people are watching this El Salvador situation. And like I said before, that game theory kicks in, whereby if you're watching something and it starts to pay dividends, if El Salvador starts to become more prosperous, if this adoption of Bitcoin has spin-off effects in terms of inward investment into their country, if that rise in remittance money makes a difference, if you start getting entrepreneurs setting up there and you have this knock-on effect, then I think a lot of countries will change their tune very fast, because if you wait, you lose any first mover advantage. So right now, I think that the main ones that are seriously looking at in South America are Peru, Panama, Cuba, El Salvador. So that's Central American, poorer country. And if you think about it, what have they got to lose?
Yeah,
they're stuck in a dollar system which they can't control. And let's be honest with this, America has shown they're willing to use their muscle to influence domestic affairs if and when they want to. So they're taking a gamble in the fact that they are taking on some powerful foes. On the plus side, they've got some powerful allies in the Bitcoin and cryptocurrency community as well. So it's not a blanket thing. The powers that be can't just do anything too drastic, because they've got their own constituents too. So I think it's more of going to be a sneaky game of how can we cut off El Salvador to show this isn't working. And you've had the IMF, I think it was, saying that we don't know if we can lend you any more money in bonds because we're not sure if your system's transparent enough, even though that makes absolutely no sense when you're doing stuff on the blockchain. It's more transparent than anything.
Yeah.
And I think things like that just show you the true nature of the world we live in. And it's a bit frightening and it's a bit worrying that these institutions are so basically exist for their own power's sake. Whatever the real intentions were when they were set up and whatever the true intentions, like any human institution, over time, the power becomes the goal. And I think that's what we're seeing. Because why would an IMF or a World Bank not say, hang on, here's a poor country trying to do something different, trying to adopt new technology. How can we support you with that? Instead, their language has been threats and we'll cut off your banking system. To combat that, people like in the Bitcoin community are thinking of saying, well, you've got a bunch of volcanoes there, El Salvador. You could do Bitcoin mining. And guess what? We'll lend you some Bitcoin to set that up. And we can invent this new product called Bitcoin bonds, which are decentralized bonds that no one can control. So it's an interesting back and forth happening.
I think this is precisely why these institutions are so scared of it, right? Because they know it's the first step on reducing their dominance. And if anyone's looked at the history of the IMF and the World Bank, as you said, apart from the intent on the very early stages of their setup, they've been stripping these countries of assets for many, many years. And, purely by looking at them and not seeing the supposed advances that they should be having by taking on these policies, anyone can objectively can see that these World Bank or IMF policies have been a failure to many of these countries, which is why when they're now moving towards these other solutions such as Bitcoin.
Yeah, there's actually a good book on that. You might have read it. It's called Diary of an Economic Hitman.
Yeah,
and it's I don't know. It's meant to be a true story.
Confessions of an Economic Hitman.
Yeah, Confessions of an Economic Hitman, about someone who goes into these countries, ostensibly to help, loads them up with debt, to as long as they implement the policies that the IMF or World Bank want, the contracts for that debt go back to Western institutions. The country eventually can't pay the debt, and therefore has to keep begging the IMF and World Bank to keep rolling over the debt, and they basically become a slave country. Yeah. Horrible, right? To think that happens, but if you get a chance to read the book, it's pretty.
It's a really good book, really well written. I think the author is Greg Palast from memory. I read it many years ago, but yeah, it's really, really good read. Just moving on to another couple of questions I've got. You mentioned before the amount of Bitcoin moving off exchanges into wallets. When I was having a chat when you're off on your break, I was having a chat with Jordan Alicio, and we were discussing the ability of, the gold market to create a lot more paper gold and different forms of gold, and people were selling gold that they didn't actually own, and creating leverage within the system. And Jordan suggested that the Bitcoin market was similar to that, in that you can buy your Bitcoin, it sits on the exchange, but that's someone else, the exchange can then sell that to someone else, and there's a lot of leverage built into the system. But I guess the counter to that, and it'd be interesting to hear your thoughts, would be it is so much more transparent that you can see what is on the exchange and therefore what is available for reselling and the ability for the system to be leveraged, right?
Yeah. So Jordan would be right if it wasn't possible to take your Bitcoins off an exchange. If it was like a normal, my stockbroker account, I think a custodian holds my shares and I don't know who's got what or who's lend. I don't know what's happening with it. Yep. Probably lend them out. If that was what happened with Bitcoin and cryptocurrencies, then he would be right. There could be a fake market, spoof trading, and all the other stuff that happens in what I think happens in the gold market. But the difference with Bitcoin is that people can take their Bitcoins off exchange. And that source of truth, which I was talking about before, shows that when people start moving the Bitcoins off exchange, you can say that things aren't being traded. You can see things are being, actual physical Bitcoins are being bought up. So even if there was a really malicious exchange, and I don't think there is, but if there was one that was trying to fake the price, basically you would see from the on-chain activity that wasn't a true reflection of reality. And all that would happen there would be is arbitrageurs would come in and try and buy Bitcoins on that exchange and take it off exchange. And if they stopped allowing people to take off exchange, then you would basically expose them for being malicious. So it's not really as possible in Bitcoin and crypto, because there's always that optionality. Not that everyone does this, but there's always that optionality to take your crypto into your own wallet at any time. And that provides an extra source of truth, an extra check and balance. And you've also got multiple competing exchanges, including decentralized exchanges, not just centralized ones. So any major price discrepancy gets arbitraged away. And by smarter investors that take stuff off exchanges fairly fast. No serious investor leaves their crypto on an exchange for any big length of time, because there's custodial risks in doing that. Many exchanges have been hacked. So It's not really true to say that in Bitcoin. It's probably a preconception Jordan's had from looking at traditional markets where that is possible. It's not really possible in Bitcoin. The only thing that can happen, and like we said before with the sort of El Salvador price dump, was there are derivatives markets with heaps of leverage, and in the short term they can cause huge price fluctuations, and that's just that's just the nature of the beast, because there's only going to be so much buyer demand, and when people are playing with leverage, there can be points in time where,
well, especially as you said, if everyone's bought the rumor and bought the news in the lead up to it, then it's probably brought forward a bit of demand, and it's sort of ripe for a sell.
It was ripe for a correction, and the extent of the correction was exacerbated by those denial of service attacks, which stopped any people waiting for a dip. It stopped them being able to buy probably as high as they wanted.
Yep.
And then there's that natural psychological effect of once the price starts falling, more than 5%, more than 10%, people will get a little bit more wary about buying. So you knock off some of that demand. But what you can see from looking at on-chain activity is steady accumulation of Bitcoin, that Bitcoin being moved off exchanges. You can actually see the top Bitcoin holders are accumulating through this period as well. You can see the addresses that hold the most Bitcoin, the non-exchange addresses, so individual accounts either owned by corporations or individuals or whoever. You can see them accumulating still. So if you look at the on-chain signals and you ignore price, you still see all the hallmarks of people buying in still, and all the sort of bullish signals that you want to see for there to be a continuing bull run. And my honest opinion is that we'll see, obviously risks apply to this prediction, but I wouldn't be surprised if we see like 100K Bitcoin by the end of this year, based on the incoming demand coming from nation states, coming from corporations, potential ETFs in America, exchange traded funds in Canada with roaring trades right now, Britain trying to do it. Countries in Europe starting to jump on the bandwagon. You're getting all these competing actors looking to get in, and like we talked about before with the game theory of nation states, that applies all the way down society. If I'm an investment fund and I'm doing brilliantly out a Bitcoin ETF or whatever, then every other investment fund wants to have the same thing as well. If your neighbor is getting rich and buying fancy cars because of his Bitcoin investment, you want to get on, and the earlier you do that, the better off you'll be. The people that will really do badly are people who wait too long to make sure it's a certain thing. If you wait for that certainty, you'll have to buy in a lot higher price point.
I hope you enjoyed that preview from New Money Investor. To get access to the full video and much more, please click on the link below.